Hey guys, welcome to another episode of 10-Minute Trades, and today we're going to be looking at Spotify. I chose Spotify because I saw a news article this weekend that said that Spotify workers are planning on going on a full-blown strike if they don't censor Joe Rogan's content, which is going to be interesting because if the Spotify workers go on strike, then the share price is not going to be doing well. So I said, you know what, let me take a look at the graph. I've never traded Spotify. I haven't traded shares or options on Spotify. I do know it's a little bit pricey, which is why partly I avoided it, but let's do some technical analysis and see what we can come up with. So right now we can see Spotify closed the day on Friday at just shy of $236 per share. We have earnings coming up at the end of October, looks like October 28th. And right now, I'm noticing a couple of things, so let's get right into it in terms of the technical analysis. Longtime viewers know the first thing I like to do is look at some Fibonacci retracements. So what I did was I drew some fib levels from basically the most recent lows back on March 13th. And interestingly, if I zoom out on this graph, you don't really see the big dip because of the illness like you see in a lot of other stock graphs. And I'm guessing because obviously Spotify is a tech company, people working from home or working remotely, they can listen to their tunes while they're at work now. So I'm guessing that's why. Also, Spotify closed a big deal with Joe Rogan recently, so I'm sure that caused their share price to rocket up as well. They have podcasts as well, not just music. But anyway, this isn't a plug for Spotify, just talking about some of the things that I've seen in the news lately. So let's draw a fib level from the recent lows on about mid to early March to the recent highs on about July 22nd and September 2nd. So I'm going to turn those on. I zoom in here. The first thing I kind of ask myself is, do I want to draw this fib level to the top of the wicks here at around 300, or should I draw them to the tops of these candles here on September 1, September 2, and then also back on July 20th? So initially I drew it to the tops of the wicks, but then I noticed, you know what, this fib level doesn't really correspond that well to the bottoms of these candles, nor to the tops of these candles here. I said, let me see what it looks like if I draw to the top of these candles instead. And as you can see, this 23.6% Fibonacci level here corresponds pretty much exactly to the bottom of these candles here in early August. Also, the tops of these candles here in early September. And as we can see, some of these wicks on September 16th and most recently on September 24th, intraday got as low as this fib level here, which is the 38.2% Fibonacci level. So I think this is a more accurate fib retracement, so we'll leave that on there just for a second there. And the next thing I like to do is trying to identify areas of support and resistance. So working from the top to the bottom, let's see. The first line identified was obviously going to be here just under the all-time highs. And I drew that because there's these three candles here in end of August, a candle here also a little bit earlier. And then there's these candles here in the early July area, which pretty much topped out, bounced down below it. We finally broke above it, came back down, got close to breaking above, traded below 279 this whole time, again broke above it, hit this cap at about high 290s to 300, and again we recently sold off back down below it. So I think one of the resistance levels right now is going to be just at around 279 and some change, maybe 280 to keep it a whole number. But let's keep moving on. I think the next area of resistance is going to be here at around 270. And I say that because you can see right around this area in mid to late August, we kind of had trouble breaking above that level until we finally did on August 26th. And then again, these candles here in mid to late July also had trouble breaking above that level. And again, same thing in early July. So I think 270 is actually going to be a relatively strong area of resistance right now. And keep going on. You know, I drew this trend line here at just about 246, 247, and we have this fib level here at about 249. I think this area is basically one and the same because, again, we can see these candles topping out here, these candles bottoming out here, this candle here. So I think basically 270 to let's just say 250 is going to be an area of resistance, probably the closest area of resistance to where we're trading at currently since we closed the day on Friday at 235. So I think our area of resistance right now is, like I said, 247 to 250. You know, maybe there's a closer area of resistance down here at 240. There are some two candles here early in the week that topped out there. There's the bottom of these candles here in June 23rd. So this may actually be another area of resistance. Not a lot of data there, but we can see some of these wicks here as well. So actually, we might have to break above 240 before we can get into the 250s. So I'm going to leave that trend line there. But as far as areas of support right now, I think right now there's a gap that I've identified right here, and that's going to be from, let me draw these trend lines, right here from 200 to 205. There's this gap here. So at some point, I think this gap will get filled. And the scary thing is right now, between where my next area of support is at 230, and again, there's not a lot of data here, right? Just basically the past week or two's worth of trading data where these candles kind of had a hard time getting down past 230. And you can see even intraday on Friday, we barely broke below 230. There's not a lot of data historically in that price level, except for these candles here back in July 19 and 22. So we'll have to see how strong this area of support is. But I think if 230 breaks, there's a gap here from 200 to about 205, 206, and there's really no trading data in this area in terms of identifying support and resistance. It's kind of a no man's land. So I think if 230 breaks, then 200 to 205 or 206 is going to be the next area of possible support, or I think we're going to fill all the way down to 200. So we're going to have to keep a close eye on it. If you're trading spot, you hope it won't break 230. We hope it bounces off it and goes up to the 240s, 250s. Now, let's just keep working here, because I think if we do fill this gap all the way down to 200, I think the next area of support is going to be at 193-ish, and then again down at 178. And this pretty much corresponds exactly with the 61.8% Fibonacci level here. And I will also note that this gap, the bottom of this gap here at 200, corresponds pretty much exactly to the 50% Fibonacci retracement level as well. So I drew these trend lines here because, we traded in the channel here from about May 20th to about June 16th, where we were bouncing up and down between about 178 and 190. So that's why I believe that these are another area of support, and support again if we break down all the way down to 200. I mean, this is a scary stock right now because I feel as though if we break 230, we could easily get all the way down to 200. So if I was owning shares or trading options, I would be really worried about that. Let's keep working here and identify two more areas of support. I think we have an area around 158 and another around 140, because again, historically, if I zoom out, you can see back in time, back in early January of this year, we were kind of topping out at the 158, 157 level. And then we also had an area of support here. We've seen multiple times we bounced off this level here at about 140. Again, earlier this year, back in January and February. So as far as trend lines go, we are in an overall uptrend. I drew this trend line here through the bottoms of some of these candles. But the scary thing again, and why I'm a little bit bearish short term, is as we can see on September 2nd and September 3rd, when the whole market was selling off, we broke down below this trend line. And not only that, if I zoom in, we broke down below the trend line, but we also broke down below both the 50, which is the pink line, and the 21, which is the orange line, moving averages. So I am short-term bearish at the least on Spotify because we broke the upward trend and we broke below the moving averages. And the other bad or bearish thing is that the 21-day moving average recently crossed below the 50-day moving average, which again makes me short to midterm bearish on this ticker. Now, if you don't like trend lines and you're more like a parallel channel guy or gal, I think the parallel channel also pretty much mimics the trend line. I mean, I can draw the bottom of the channel right to where my trend line is, and the top of the channel right to some of these candles here. You can see we broke above that channel from about mid to early June to mid to late July, came back down, and again we broke down past that channel recently. So yeah, if I was to give a sentiment right now on Spotify, I'm really looking hard right now at the 230 price level. If that breaks, then I am going to be very scared, because I think the next stop is really going to be down to 200. So personally, if I were to trade options on it, I would be looking at maybe selling some credit spreads to the call side, some call credit spreads. I'd want to sell them at least above 260, because then it would have to break through below these resistance levels at 240, 250, and also these moving averages at about 250 in the low to high 250s. So I would want to play this actually to the upside, hoping for a bearish trend, meaning a call credit spread, thinking that Spotify is going to trade sideways or hit resistance if it does go up a little bit. But I would be scared of selling cash grid puts to the downside because I am short-term bearish on this ticker. But of course, none of this is financial advice. It's only for entertainment purposes only. Let me know in the YouTube comments below if you agree or disagree with my technical analysis. Let me know if you have options or if you own shares on Spotify and what your plans are. But as always, happy trading.